Let's work on some Chapter 12 exercises and problems. I have our ebook open right here on the computational exercises for Chapter 12. So you just want to get to those. So in your ebook, just get into Chapter 12 and then click on the computational exercises and it'll take you right there. And we're going to work most of them plus a couple of problems. Some are pretty short. Some have a little bit more going on with them. The first one, Metulus Inc., a calendar year C Corp, owns a single asset with a basis of 325 and a fair market value of 800. They have a positive E&P balance. The entity elects S Corp status for 19 and then sells the asset. Compute the corporate level built-in gains tax that must be paid by Metulus. So they convert to S Corp, sell the asset. So you can see right here the numbers: fair market value 800. The basis of 325. So it's pretty straightforward. There's really nothing here that's too crazy. So 800 fair market value, 325 basis. And so everybody can just kind of do the mental math there and go with the gain is 475. And then the gain is the 25%, or I'm sorry, 21%. So take 0.21 and then multiply 475 times the 0.21. And you get 99,750. Okay, so 99,750. So I didn't put in all the zeros, but it'd be $99,750. The next one's question 16. Tyrone Corp company, an S Corp with positive E&P, reports gross receipts for the year totaling $400,000, of which $200,000 is PII, or passive investment income. Expenditures directly connected to the production of PII are $80,000. Compute the PII tax. Okay, so a couple of rules to think through then with this one. Tax is imposed on the excess of passive investment income of an S Corp that possesses AEP, accumulative E&P, from the C Corp years. The tax rate is the highest corporate tax rate for the year. The rate is applied to excess net passive income, ENPI, excess net passive income, which is determined using a formula. And so I'll show you guys what that is here. So here's a formula to kind of think through. So excessive net passive income, ENPI, equals PI in excess of 25% of gross receipts divided by, so let's do a slash here to equal divided by PII for the year, passive investment income for the year, and we multiply that, so the X is the times, we multiply that by net PII for the year. So take your PI in excess of 25% of gross receipts, divide that by your PII for the year, and then multiply that whole thing by your NPII, your net passive investment income for the year. So we should probably put some brackets right there to make it a little bit more real and easier to understand. So the income then is this formula here. So going back to the question, we have 200,000 of PII. We have 400,000 of gross receipts, and then expenditures are 80,000. So we're going to take 200,000. I'm going to subtract from that minus 0.25 times 400,000. Okay, and then I'm going to oops, let me hit yes on that. And then I'm going to so I'm going to take 200,000. Oops, I didn't hit 200,000 very well, or did I? 200,000 minus 25% of 400,000. I'm going to divide that by 200,000 times 120. Okay. I got to get my math just exactly right here. So what I'm going to do then is take 200,000 minus this number, divide that by, I didn't do that right. I'm just going to type in 200,000. Okay. There we go, 200,000. So I'm going to take these two items here, add them together, and then divide that by this item here. And I'm going to do my brackets. Okay. And then I take that and I multiply that times 120, which is 200,000 minus 80. Okay. And then I'll multiply these by each other, and that's the answer. Okay, there we go. So 60,000. And if you remember, going back to the numbers, the 200,000 minus the 80 is the net number. Okay, the PII minus expenses to get the PII. That's my 60,000. So then I pay 21% of my 60,000. So 60,000 times 0.21, my corporate tax rate, gets me my tax, which is 12.6. So the answer is 12.6. Okay, then we'll come back to the next one, which is question 17. Dion is an S shareholder, owns 20% of Meadowbrook stock for 292 days and 25% of the remaining 73 days in the year. Using the per day allocation method, compute Dion's share of the following S Corp items. Ordinary income is 60,000, and then we're going to divide that out. Okay, we'll take each three of these items here and divide that out. So the key numbers are 20% for 292 days and 25% for 73 days. So let's do ordinary income first, which is 60,000. So I'm just typing in OI, ordinary income, 60,000. Okay, and so we owned 20% of that, so 20%, for 292 days out of 365. Okay, and then of that 60,000, we own 25% of that, 0.25, for 73 days divided by 365. Okay, and we should probably do some, I guess it's 80-20, very good. And so let's multiply across. 60 times 0.2 times 80, and I get my first allocation. Then I can just drag and drop that down, and we get the second one. So the sum of the two is 12.6. So the answer for the first part of this ordinary income is 12.6. Then we do the exact same calculation for the $1,000 of tax-exempt interest, and we get 210. Okay, so exact same calculation. So going back to here, this would be 210. And the charitable contributions, it works the exact same way. It's $3,400. So just put in the new numbers, and I get 714. Okay, so 714. So my answer is 12.6, 210, and 714. Okay, question 18. Noelle, the owner of all the shares of Clock Company, an S Corp, transfers her stock to Grayson on April 1. Clock Co. reports 70,000 NOL for the year, but only 10,000 occurs between January to March. That is right before she transferred her shares. Without a short year election, how much of the loss is allocated to Noelle and how much is allocated to Grayson? If the corporation makes the short year election, how much of the loss is allocated to Grayson? The tax year is not a leap year. Here is, we're saying that 3 months, that January, February, and March, that was 91 days. So January, February, March was 91 days. They said it was not a leap year. If it was a leap year, it'd be 92 days. Okay, and that's the key. So that 91 days, let me scroll down here, is 91 days. Okay, and obviously there's 365 days in a year. Okay, so that percent, 91, divided by 365 is the percent I'm looking for. and I get almost 25%. I'm going to multiply that by the 70,000. Okay, so that percent times my 70,000 equals 17,452. Okay, so without a short year deduction, 17,452 of the loss goes to Noel, and the rest of it just goes to Grayson. So the full 70,000 minus the 17,452 is the amount, the 52548. If we're going to round here, I'm just going to put in 17452, just force that to 0. So the 52548 then goes to Grayson. That is without the short year deduction, short year election, I should say. With the short year election, then it just becomes 10 versus 60. They mentioned specifically 10,000 happened during the first 3 months, and 60,000 happened after that. So if we go ahead and say, if we do make the short year election, then Grayson gets 60,000 of that, and Noel takes the rest. Okay, question 19. With this one, Grenier Inc. Calendar Year S Corp holds no AEP. During the year, Chad, an individual Grenier shareholder, receives cash distribution of $30,000 from the entity. His basis is 25. Compute his ordinary income and capital gain. What is his basis after the payment? And this is as straightforward as they get. There's no twists or turns with this one. Hopefully you can kind of just think this through and go, well, his basis is 25. He received 30. So the basis goes down to 0. So 25,000 just simply treated as receipt of his investment, so it's tax-free. So 25,000 gets put in his pocket tax-free. The other 5,000 then he would pay capital gain tax on. So he takes 5,000 pays capital gain tax. 25,000 is completely tax-free. Then question 20. Question 20 has a lot going on. It's a little bit more complicated, but it's really not too bad. Holbrook, a calendar year S Corp, distributes $15,000 cash. That's the key here. It's $15,000 cash to its only shareholder, who is Cody, on December 31. His basis was 20. The AAA was 8. Holbrook holds AEP of 2,500, and so complete the chart below. So it says right here, distributions from the account. So remember that the AAA account, that amount is 8,000, and then the AEP account is 25. Okay, so what we do then, we take the distribution first from AAA. So the AAA account, we're going to apply 8,000 to that. Okay, and that reduces the basis by 8,000. So the answer here would be 8,000, 8,000, 0. Then we reduce the AEP. The AEP had a balance of 2,500. Okay, so 8,000, 8,000, 0. Then this becomes 2,500, no effect on basis, and then 0. Okay, and then the distribution from the Cody stock basis becomes the balance, 4,500. So 8,000, 2,500, 4,500, the sum of those three numbers would be 15,000. Okay, and that 4,500 here would reduce the basis by 4,500, and then we get to a $7,500 balance after distribution. Okay, so I'm just going to type in the numbers. So just imagine these three columns here, and I'll just type in the numbers so you can just kind of see what they are. So it becomes 8,000, 2,500, 4,500. The middle column, effect on basis, 8,000, 0, 45. And the balance after distribution is 0, 0, and 7,500. And that 7,500 is the 20,000 basis minus the 8,000 minus the 45. That's the 7,500. Okay, so that's the answer for question 20. Question 21. Whoops, went to the wrong thing. Question 21, right here. It says that Vogel, S Corp for 5 years, distributes a tract of land held as an investment to Jamari, the majority shareholder. Land is purchased for 45 10 years ago, currently worth 120. As a result of the distribution, what is Vogel's gain? How much is reported as distribution to shareholders? So Vogel will recognize a capital gain of 75. The 120 minus the 45 is 75. That increases AAA by the 75. The gain appears on Vogel's K1, and a proportionate share of it passes through the shareholders' tax returns. For letter B, the net effect on the distribution to Vogel's AAA, it reduces AAA by the fair market value of 120, and so remember that it also increased it by the gain of 75. So answer to B is minus 120 plus 45, which equals 75. So, I'm sorry, I said that backwards. Plus 120 minus 75, which equals 45, the 75 gain. So plus 120 minus 75, which equals 45. So B is 45. Letter C, assume instead the land had been purchased for 120 and is currently worth 45, so we're upside down. How much would Vogel recognize as a loss? What would be the net effect on Vogel's AAA? What would be Jamari's basis in the land? Okay, so now we're upside down. There's a $75,000 realized loss not recognized on the corporate level. Okay, we can't recognize that on the corporate level because it's a loss. It does not reduce Vogel's AAA. Only when the S Corp sells the asset does it recognize the loss and reduce AAA. Therefore, the net effect on the AAA is a decrease of 45,000. So the answer to B and C is both 45. Okay, so just FYI. And remember, Jamari's basis is 45,000. So the key is don't do that. Okay, the corporation should sell that property, take the 45, and give it to Jamari. Then that's what they should do. Okay, question 22. Jonas is a 60% owner of ARD, S Corp. At the beginning of the year, the stock basis is 0. Jonas's basis is in a 20,000 loan made to ARD, as evidenced by ARD's note, and has been reduced to 0 by prior losses. So the basis was reduced, and then because of extra losses, the loan basis was also reduced. During the year, Jonas's net share of ARD's taxable income is 10. At the end of the year, ARD makes a $15,000 cash distribution to Jonas. After these transactions, what is Jonas's basis in the stock, and what is the basis in the debt? What is Jonas's recognized capital gain? So remember that basis can never go below 0, but the shareholder's debt basis is reduced when loss is greater than the stock basis. Okay, so here the stock basis increases by 10,000 of income right here, which is taxable to the shareholder because their basis is 0. But the $15,000 distribution reduces the basis back down to 0. So 10,000 makes basis go up to 10,000, but then we turn around and pay 15,000 to ARD. And so because of that, he has to recognize capital gain of 5. Okay, so basis goes up by 10, but he's given 15, so 10,000 is non-taxable, 5,000 is capital gain, and his basis immediately goes back to 0. Okay, so I'm not doing question 23. I'm going to stop right there and do a separate recording for the problems. So this one will just cover the exercises, and I'll do a separate one for the problems.